I still approach GameStop, Jeff, as you can imagine, from a fundamental perspective. I don't know, I was an analyst for 10 years and wow, I read financial statements, but it's totally detached from that reality. What is your read on GameStop? What do you think happens next and why?
It's a dump truck of a company, to be honest. It's 5 years ago, I was actually long. I had my kids' accounts in it. I owned it when it was the $4 stock. I didn't know who Roaring Kitty was, but I figured that you could manage this business a little better than the guys that were in charge then. And you could, but the problem is that things just got out of control. I had no idea why the stock spiked the way it did. So I sold at 25 and I thought I was freaking just the genius of all time. It went up to a split adjusted, $5 billion or something insane like that. And but so it stopped making sense from a business perspective a while ago. It's a totally different company now. And so what happened the other day when the Roaring Kitty guy came out and 700,000 people, myself included, sat there and wondered exactly how much microdosing he'd been doing and what the definition of micro might be. It's his notion that, I've done no research on it. I just really trust the company. That falls flat to guys like you and me because that hasn't really worked out that well.
The 10K says this company's garbage, but it doesn't matter. It doesn't seem to matter anymore.
The 10K does, the anecdotes do, the people he brought in to kind of fix it up and then summarily fired.
Jeff, you ever been to a GameStop? It's so dreadful. There's no lights in these stores. And there's over 4,000 of them.
No, they're packed away in the mall where the newsstand used to be and the shoe polish guy, and it's just this is probably not a growth industry, and they're selling cassettes. So it's like Bob, it's the house of VCR rentals, and in a modern world, and they never figured out how to go online. And it just as a retailer, it's nothing. Now where it becomes interesting. It's an $11 billion company. Ryan Cohen, to his credit, was smart enough to kind of monetize that. Now, the cynical way of looking at it is he is exactly the type of fat cat that was pilloried and made so much fun of in this kind of, we're going to stick it to the man with our diamond hands thing. It's like, we're really going to give it to him, huh?
I find it amusing to hear GameStop called a dump truck of a company compared to what it was back in 2021. I find it amusing because now the company has no debt other than a single low-interest loan associated with the French government's response to the pandemic. GameStop has narrowing losses, they have solid leadership, and they have roughly $4 billion in cash. So, purely based on fundamentals, the company is doing much better today than it was back in early 2021. I'll briefly mention a few things since we had the annual meeting of stockholders on Monday. Like I said many times prior to the meeting, I was not expecting any news about mergers or acquisitions so soon because M&A takes time. Also, annual stockholder meetings are typically not when companies announce big news. Rather, these meetings are more of a legally required, check-the-box type of meeting that all publicly traded companies are required to host for the shareholders. Also remember that, up to this point, GameStop CEO Ryan Cohen has refused a salary from GameStop. He bought GME stock with his own money, and as he has said in the past, either the company turns around or he goes down with the ship. I think it's important to keep this in mind and remember that Ryan's incentives are very much aligned with shareholders' best interests. Now, I don't know what GameStop will become in the future. They have $4 billion of cash and a very real opportunity to transform the business in a meaningful way. I did notice a job listing on GameStop's website for a Director of Global Treasury. Duties for this position include reviewing investment opportunities and advising on opportunities in line with investment policy. So perhaps that is a clue. Perhaps GameStop intends to use some of its $4 billion in cash to invest where the company sees value. In the immediate term, GameStop's strategy is very clear. As Ryan Cohen said on Monday, a smaller network of stores with an expanded assortment of higher value items that fit into GameStop's trade-in model. So it appears that GameStop is focused on reducing costs and pushing forward in the collectibles market. GameStop is offering products that are difficult to find at other retailers such as graded Pokemon cards and sports cards, unique controllers, and other physical collectibles. I think the GameStop NFT marketplace is also a testament to the fact that GameStop is really trying to push into the collectibles market. I know the NFT marketplace was discontinued due to regulatory uncertainty, but the point still remains. And on a side note, you may have noticed that the SEC recently dropped an investigation into Ethereum as a security, and they appear to be anticipating spot Ethereum ETFs to be approved soon. So with that in mind, I wonder if we will see a return of the GameStop NFT marketplace at some point in the future. Regardless of that, GameStop is pushing hard into the collectibles market, and I hope we will hear more news soon as to what GameStop intends to do with the recently raised capital. Ultimately, I want GameStop to survive, and I am rooting for them. At the end of the day, what individual investors want is simple, and nothing we're advocating for is beyond the realm of reason. Individual investors want a free, fair, and transparent stock market. We want large institutions to be held accountable for their actions. We want individual investors to have access to the same real-time data from exchanges' better private feeds, which is currently only available to the large firms on Wall Street. We want short sale data to be reported in real time. We want an end to excessive amounts of failures to deliver, and we want entities who fail to deliver on their obligations to be held accountable. We want an end to payment for order flow due to the insane conflicts of interest it creates. There's a reason why so many other countries have already banned it. We want the exchanges to be not-for-profit utilities as they once were. The exchanges becoming for-profit ventures has created so many conflicts of interest at the expense of individual investors. We want increased competition among market makers. And we want all of individual investors' orders to be routed directly to lit transparent exchanges rather than opaque alternative trading systems known as dark pools. Ultimately, it's simple. What we want is a stock market that offers a truly level playing field for all investors. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.